Good morning, everybody, and welcome to our national Q&A call. We're going to get started right now with news you can use, and today is the 8th of November, 2022, Election Day. Get out there and vote if you haven't already done so. You know, as the old Chicago politicians used to say, vote early, vote often, which evidently happened a lot in that last election. So get out there and do your civic duty, right? When I lived in the fraternity house back a million years ago in college, the rule was if you didn't vote, you didn't get one of those I voted stickers they used to stick on, you couldn't get dinner that night. So they required everybody to vote. It's probably a good thing. We need to all be heard. Anyway, that's my PSA. Let me get started and talk a little bit about my topic today. And I'm going to talk a little generalities today. First of all, let me give you the conclusion first, and then I will backfill with the data that we need to justify. My belief is at the end of the day, this housing recession, decline, depression, this housing crash that they like to call it, that is we're in the midst of and is coming at full force, is going to be dropped at the feet of investors. We know about the 2008 recession. Everybody thought it was the subprime mortgage crisis that was caused by lenders writing mortgages with their eyes closed, and people having to just fog a mirror to make sure they were alive in order to get a loan. A lot of that's true. There's a lot of fraud that went on during that period of time, so on and so forth. But this one, I think at the end of the day, and you may not hear this for another year or so, but I'm making a prediction right now. Kevin, write this down, today's date. I'm going to predict at the end of the day that society in the United States will view this as an investor-caused crisis. This is going to be laid at our feet. And as usual, the way that all this stuff works, there will be laws that will be enacted down the road to, minimize our adverse impact on society. Whatever. There's a ton of rules on investors in California as it is, and things like the foreclosure process and so on and so forth. And I think you're just going to see more and more of that come as a result of this. Why do I say it's an investor-caused crisis, or why will people say that? Well, first of all, back in 2008, the start of the Great Recession, the start of the big housing crash that we're all familiar with, and for those who were in business long enough ago, in 2000, we had one as well. What basically, what caused that is we just talked about. There was some problems in the system with writing the mortgages and so on and so forth. But investors only had about 8 million homes that they had up for rent. So investors as a group are made up of, kind of two classes. There's the buy and hold investors, this landlord type folks that want to buy and own a piece of property for rent, for long-term appreciation, cash flow, et cetera, the old Carlton Sheets approach, right? There's about 8 million homes, single family homes that were owned by investors 15 years ago. Today, it's 28 million. There are 28 million homes that are owned by investors. Now, these are homes, keep in mind, investors are non-owner occupants, right? It's a home you own over there and you live over here. And if you think about that, as non-owner occupied houses, if something goes wrong, which house are you going to let go first? In other words, you have a financial crisis, you have a problem with your money. Are you going to let your non-occupied home go, or are you going to let your home that you live in go? Of course, you're going to let that one go, right? And or if there is a glut of houses on the market, what are you going to do with your rental home? There's a lot of rentals out there, and there's only a minimal amount of renters bidding for the same number of rental properties. You're going to drop the rents on those. So those are two things that are happening right now. If you want to know where the housing crash that we're in the process of is the worst in the United States, well, I should go back and talk about the second class of investors. Would be kind of like primarily what we do, which is transactional engineering, or in the case of a rehabber, it's cash purchases, rehab, and resale. That group totals probably 800,000 to a million homes a year, something in that range. And there is more people in this group than there is in this group. In other words, typical landlord owns 4, 5, 6, 7 doors. a typical flipper does, one or two a year type thing. A typical transactional engineer may do 4 or 5 a year. And so there is, as a group, there's a lot more people here, and there's a lot less properties here, a lot less investors over here, but a lot more properties. But this is the big activity over here. This is the thing that makes the news. Anti-flipping laws in some of these states, you can't wholesale. In some cities, Atlanta, you can't wholesale. There's all kinds of rules coming that they're trying to do, and they're going to blame this smaller group for basically what this larger group is doing. So as in mass, a large number of these 28 million homes that are owned by landlords, and a lot of these folks are mom and pops who just have a second home that they rent out. A lot of those, when the economy sinks and they've got a lot of equity and they need cash, they just put those up for the market. And it's strictly a business deal for them. So all they got to worry about is just getting some cash back out. So if they paid, $300 cash for the property and it rose to $550, and the market now is $500, it's gone down 10%, and they want to sell that and get cash, they all do is drop it to $450, and they still make $150,000 net. It's less than the $550 it used to be worth, but from their standpoint, that's a win, right? They come out dollars ahead, cash in their pocket, that type of thing. And so that's what's leading the charge for price decreases. Now, the mainstream media will have you believe that it's just the fact that buyers can't afford these higher interest rates. And we've talked about that ad nauseum on these news you can use in previous months. And there is a certain amount of truth to that. But realistically, being on the ground in a lot of markets, as I am, and with a lot of your folks' kind of information that you give to us, that's not the real thing that's going on out there. There is still a ton of buyers for every house that's out there, if it's in a good area, and there is a way to get around a higher interest rate. There's things like points buy downs, and you just discount the price, so on and so forth. There's a lot of ways to get around that. So that's kind of a red herring. What's really happening, what's really feeding the market is these investors who own 28 million homes that are rentals, and the folks that have been building homes. And there's something like 1.8 unfinished in process homes that are being built across the country. Those are the ones that are going to flood the market. 2008, it was the foreclosures that flooded the market with 2-3 million homes. Now it's going to be these investors that want to sell off and get their money. And it's going to be these guys that are building homes that aren't going to be able to sell them for as much as they've got into the house when it's done. So what they got to do is get their cash out and try and stave off bankruptcy, which a lot of them are not. They're starting to fall into bankruptcy now. So, you're going to have, even if only 5% of that 28 million get sold, that's 1.4 million. The 1.8 that are in process have got to be finished. Let's say another 1.4 of those gets finished. That's 3 million homes, in addition to the normal 400, 500, 600,000 homes that might be for sale at any point in time. So that's a huge increase in the market, and that's what drives down prices. Someday, someone's going to figure this out. You're starting to see, I see little cracks of it now out there in the sources that I look at. But they haven't really pointed the finger at investors. I believe they will, and I believe that this thing 10 years from now will be known as the great investor crisis of 2022. Investor fueled, investor caused. We're neither to blame nor are we the cause, in my opinion, but we are going to get the blame, even though I don't believe we deserve it.